You are in company here with one Ben Bernanke. Bernanke's major theme out of the Depression was get the banks in order first. What is the risk to all of European banking?
Well, clearly with the Greek banking system cut off from the liquidity facilities of the European Central Bank, the Euro system, the Greek bank, unless the tap is opened again, are bust, right? And this will immediately raise questions about banks everywhere, however unfair and unnecessarily. And that is true throughout the EU. Within the Eurozone, of course, there are questions raised if the Greek sovereign defaults, as they like it to do at the end of this day, about the solvency of the other periphery sovereigns.
Does a default force restructuring? I can't get a straight answer.
No.
If Greece does something dramatic, does that force the dialogue of restructuring?
Well, if Greece doesn't pay its IMF obligations, there are likely cross-default clauses to the other debts owed to official creditors, the EFSF, the ESM. There's no implications for the privately held Greek sovereign debt.
But don't we have to have a restructuring of all that debt as Puerto Rico needs it restructured?
Oh, no. I think, no doubt, that money is gone, right? The 240 billion euros...
You're willing to say that money is gone within a
Yes.
restructuring of zeroed out 25 years, 30 years?
Well, what they're going to end up doing, most likely, is turn it into zero coupon perpetuities.
But even a
promises to pay nothing forever.
Yeah.
But a missed payment today doesn't necessarily mean it's in default, and it'll be up to the ECB as well to decide.
It is in default.
It's in arrears,
they call it arrears, but it's simply the IMF's way of calling it default. It does, in principle, risk triggering the acceleration of the claims of the others. So that's a default by any. It has no implications cross default for privately held debt, but it is definitely a default.
Could I just bring in a comment from Joseph Stiglitz, who was writing in Project Syndicate yesterday, and here's what he says. Almost none of the huge amount of money loaned to Greece has actually gone there. It has gone to pay out private sector creditors, including German and French banks. Greece has gotten but a pittance, but it has paid a high price to preserve these countries' banking systems. The IMF and other official creditors don't need the money. Under a business-as-usual scenario, the money would most likely be lent to
Let me translate that, which I think is so important. What Stiglitz, the laureate, is saying is Germany is essentially keeping BNP Paribas and SocGen in chips at the expense of the Greek people. Do you agree with that statement?
This happened in 2010 and 2012, yes. What should have happened in May 2010 is a comprehensive restructuring of the Greek sovereign debt and a significant write-off of the debt that was done privately held. Among the major creditors of the Greek sovereign were French and German banks. And they were effectively bailed out, permitted to exit by the euro area taxpayer.
And that's the argument that Greece has right now. I want to switch this to a discussion. A number of people in interviews have said Argentina matters here. Let's look at an important quote on Argentina. We're thrilled to bring you this perspective this morning. Should Greece default, Argentina is an apt analogy, says Arturo Porzakansky.
Oh, that name is
but for Greece, it would likely be worse. Argentina was comparatively lucky. This is where your expertise in Greece comes from. Your father is an expert on this. Do you agree with him? Like, have you ever thrown a roll at your father across the dining room table saying, no, Dad, Argentina's terrible?
My dad and I have very heated discussions and debates. We have different perspectives.
What is the debate now on Argentina versus Greece?
Well, so the debate here is, well, first of all, Argentina is an apt analogy. Of course, they depegged from the dollar. There was a banking crisis, a debt crisis, an economic crisis. It was one of the worst crises in modern history. But the difference is that Argentina grew afterward because they could export. They exported soybeans, they exported grains, they exported all over the world. They had a bumper harvest and they made a lot of money. Greece doesn't really have that option.
Doesn't have that agriculture system and the diversified economy that Argentina had. Is that your point?
Right. And now, of course, the big repercussion here is the banking system. What's going to happen with the banking system? All these contracts, if contracts are now denominated in drachmas as they were in pesos,
right, there's this
mismatch that happens where you can't repay your suppliers.
The distinction, Professor Buiter, is that in Argentina we had a workout, I think, of William Rhodes at Citigroup years ago with John Reed and others. Walter Wriston worked through horrific debts. That's not happening in Greece. Why not?
Not in 2001. Then
no,
Greece
it was a few years
defaulted,
ago.
in the ugly way, the way that Greece is looking now. No, I think the main difference is that Argentina hit a commodity boom, within a couple of years of having a massive depreciation. Greece is not going to hit a tourist boom, in all likelihood, within 2 years of it exiting.
How do we get to the time of Bill Rhodes? How do we get, if I talk to El Arian, Orphanides, Sachs, Buiter, all you guys, how do I get to where we know we have to go?
You have to go back and stick Greek sovereign debt back with the original creditors, and that can't be done. Right, because Bill Rhodes dealt with a handful of large banks, and he didn't deal with official creditors, other than the IMF and the US, and he didn't deal with the rest of the
And Vonnie, this is like J.P. Morgan in 1907. They locked everybody in a room and said, fix it.
Right, but that's not exactly what we're seeing here. And Katya, if I can ask you, I mean, Argentina might have been okay for a year or two, but now we're looking at 15% inflation officially.
The question is how you manage your accounts when the rain is falling, right? What do you do for when the rain dries up, right? That's the problem that Argentina has. They spent. The inflation flew up.
It's locked out of international markets as well.
They're locked out of international markets, and they were able to stay locked out of international markets because they had the bumper harvest, and they were able to pull from their reserves to pay their debt.
Yeah.
Now times are changing.
Well, one important point, though, is that Argentina, while it grew a bit, right, after each of its disasters, of course, got straight back into trouble within a decade because the fundamentals were not changed. Right? The notion that you can devalue yourself out of trouble, right, the way like Argentina did, they never did. They had the short-term cyclical recovery, partly commodity boom driven, and then the fundamental Peronist mismanagement took over again, and we're in the mess now.
Superb conversation. Willem Buiter.